Alright guys, this is the second part to the pairs trading strategy. So what I'll do now is I'm going to write a Bollinger Band strategy. It'll generate kind of like a report for each spread that I pass in. And for my parameters, X will be the spread and then equity will be our starting equity. Alright, so we'll pass in X to be our ticker. So we're going to subset spreads to find our ticker, and then that'll be our data. If there's any NAs, I'll carry the last observation forward. To make sure this is working, I'll set X equal to spreads names. So that'll be our ticker. That'll be data. So that's the data for our first spread. Alright, so now I'm going to add dot close to our column names. And that's because for B bands, we need a column name set equal to close. It has to have dot close in there in order to calculate B bands. So B bands of data. So here's our spread. Here's our lower band, the moving average, the upper band, and the percentage to the band. Alright, so we're going to add a signal column, set that equal to NA. And then here we're going to calculate the signals. So for our first signal, whenever the close of the spread crosses the moving average, we're going to set that equal to 0. So we'll do that by running the following line. Alright, so when the close of the spread is above the upper band, we're going to short when close is above the upper band. And then we're going to buy when it dips below the band. We're going to make the very first observation of our signal equal to 0. We're indicating that we're flat on the first date. Alright, so we'll take a look at X. Alright, so here we're flat on the first date, and I'll use NALOCF to bring the very last observation forward. So what we're saying is we're going to hold that signal until we generate a new signal. So for all these zeros, we're going to be flat until we get a new signal. So it'll change here, and then we're going to be long until we get a different signal. So we'll do that by running X sig NALOCF X sig. So now we shouldn't have any NAs for signal. Alright, so now we're going to lag our signal so that we can't trade on the same bar. We have to wait until that bar closes. So we'll use lag sig. Alright, so now we have to change, or we're going to fill in the very first signal again. Set that equal to 0. Alright, so since we only have the spread, in order to calculate the trades, we need the actual stocks in here. So I'm going to extract the ticker names by using this column name. So we'll do tick as character. And we'll do call C str split. We'll do ticker, and then the pattern is separated by a period. Alright, so we'll use str split from the stringer package. So now we have tick, and now we have the appropriate tickers. Alright, so now we're going to get the data from our database. Symbol is equal to the first ticker. Minutes is our time in force, which is 30 minutes. This will be our data for our second ticker. Next, I'm going to add those two columns into X by merging our first ticker's data, second ticker's data, and then X. Alright, so now we have the first asset, the second asset, the spread, our Bollinger Band data, and then our signal. Now I'm going to add a column for our first asset and our second asset. And these will hold the prices of when we enter and exit a position. So for asset 1, the very first observation will be X 1 1. This will be 1 2 for our second asset. So if we take a look at X, our prices for asset 1 and asset 2 are the very first observations here. So whenever the signal changes, so will this price. So in order to do that, I'm going to iterate throughout this data frame by using for k in 2 to the number of rows in X. I'm going to set asset 1 Alright, so core data X k minus 1, and we're looking in the sig column. So if that is the same thing as X k sig, then I want to return the lagged assets price for asset 1. Otherwise, I'm going to return K1, which are our closing price for asset 1. take a look at X. So it's going to remain static until we get a new signal. And when we do get a new signal, it'll return that asset's price for that bar. So we'll do the same thing for asset 2. So for asset 2, we'll just change this to asset 2, change this to asset 2, and this last observation, we'll change it to 2. I'll go ahead and run this line. Take a look at X. Alright, so here we add a signal change, and this price should match this price. Alright. Next, we're going to calculate P&L points for asset 1. We're going to insert a new column called point 1. We'll set that equal to 0. And then we'll do 4K into to the number of rows in X. We'll do if else core data K asset 1 does not equal core data X K minus 1 of asset 1. Then I'm going to reclass core data of X K asset 1 minus core data of X K minus 1 of asset 1. I'm going to multiply that by core data X K minus 1 sig, and then we'll set that equal to match 2X. Otherwise, I'm going to reclass 0 and match 2X. And then I'll round everything to 4 decimal places. If the price today is different from yesterday's price for asset 1, I'm going to calculate the difference and multiply it by the lag signal. Otherwise, just return 0. So go ahead and run that block. We'll take a look at X. Alright, so here we were long until this bar. So since we were long the spread, we were long the first asset and short the second asset. So we made 9 cents because 23.13 minus 23.04 is 9 cents multiplied by this lag signal. Also here it was long again. We close on this bar. So here we got in at 22.61, out at 23.03, and we made 42 cents. All right, good. So now I'm going to copy this and make this points for asset number 2. So for points 2, I'm going to run that line, adding a column for asset 2's points. I'm going to change this to points 2. Asset 1 to asset 2. And then one more thing I need to add is I need to multiply this by -1, because like I said, our spread is involved with longing one asset and shorting another. So whatever sig is, asset 2 will return the opposite of that signal. So that's why we need to multiply this by -1. Alright, so I'll go ahead and run this block. We'll take a look at X. So here we were long. So since our signal was to long the spread, I was long asset 1 and short asset 2, but it looks like we lost money in shorting asset 2. So the difference between 21.29 minus 22.34 is $1.05, because we were short at 21.29 and we closed our position at 22.34. We'll take another example. So here the same thing. We were long the spread, so we were long asset 1 and we were short asset 2. Asset 1 made 42 cents, and since we were shorting asset 2, we lost 35 cents. Alright, so that's the points for assets 1 and 2. Now we need to calculate the share size for assets 1 and 2. So here we'll do share size for asset 1. So I'm going to divide my equity by 2. Remember, equity we are passing through. So here our starting equity will be 2,500. We're going to split that in 2. So we need to make a new column called shares 1 to keep track of the number of shares we can buy for asset 1. We'll set that equal to 0. And then again, we're going to have to run through each row. Then we'll do K. Shares 1 is round split core data X K asset 1. I should actually round down by using floor. So here, when we generate a new signal, we'll divide 2,500 divided by 2304, which gives us, 2,500 divided by 2 divided by 2304, which gives us 54.25, but we're rounding down, so we could afford to buy 54 shares, which is accurate. But in this strategy, is considering that you'll always have at least 2,500 to split amongst asset 1 and asset 2, so that's one thing to remember. Alright, so we'll copy this. That's share size for asset 2. Change this to asset 2, this to asset 2, and then this to asset 2. We'll take a look at X. So here, when we generated a signal, we'll do 2,500 divided by 2 divided by 2109, which gives us 59. Oh, it's 2129. So we round down, and that gives us 58 shares. Alright, so in order to calculate our profits, we need to multiply the number of shares times our points. So we'll do that here. So I'm going to add a column called gross, and I'm going to multiply 0.1 by by shares 1. I'm going to add that. Points 2 and shares 2. And then I'm going to round all of this to 2 decimal places. And then this should be points 2. We'll run this line, take a look at X. So here we're along the spread. We closed it out on this bar. So our gross profit was 52 shares. We made 9 cents. So 54 times 9 cents is 486. But then we were also short 55 shares and we lost 1.05 points. So if we add 57.75 plus 486, we get negative $52.89. So that number is accurate. All right. So now we need to calculate net profit, because unfortunately trading is not free when you do it algorithmically. So here x.net is a new column. We'll set that equal to 0, and then we'll iterate. So 4k and 2 to the number of rows in x. We will do x k net. We will do if else core data x k gross does not equal 0. And I'm going to reclass core data x k gross minus, and here I'm just going to hard code the commissions. So for Interactive Brokers at the time, it was $1 multiplied by 4. So it's basically $2 per asset round trip. We'll do match 2, we'll do x k gross otherwise just return 0. So we'll go ahead and run that block. Take a look at x. So whatever gross is, we need to subtract $4. So that seems accurate. This one seems accurate too. So all is well for our net. Now we need to calculate equity. So again, insert a new column called equity. And then I'm going to iterate for k and 2 to the number of rows in x. Here we'll do if else core data x k net does not equal to 0. Then we need to reclass core data x k net plus core data x k minus 1 equity set this equal to match 2 x, otherwise it'll be x k minus 1 equity. Alright, so whenever we close a trade, we'll add that to the previous balance of our equity. Otherwise, just return the previous balance of our equity. All right, so we'll run that block. All right, so we have 2,500. So here we lost 56.89. So 2,500 minus 56.89 gives us an equity balance of 24.4311, which is what we have here. So it looks like we calculated this accurately. All right, so now I'm going to keep a column for our drawdowns. By adding a new column called DD, and I'm going to round negative cumulative max of X equity minus X equity divided by X equity, and I'm going to round that to 4 decimal places. Take a look at X. So here we see that 24.3311 divided by 2,500 minus 1 gives us approximately a 2% decline. So here I'm going to count the number of trades. Set this equal to 0 for starting. And then 4K and 2 to the number of rows in X. Trades will be if else core data X K net does not equal 0, then reclass 1 added to core data X K minus 1 trades match to X, otherwise just return X K minus 1 trades. Alright, so I'm going to run this block, go to X, so here we're long spread, so every time it closes, it'll add 1 to the number of trades. So that seemed to be calculated accurately. I also want to calculate the drawdown duration. So we'll add a column called duration, set that equal to 0. And then we'll do X, K duration, if else, core data, X, K drawdown does not equal to 0, reclass sum of core data, X K minus 1 duration plus 1 match to X K1, otherwise 0. So I'll run this block. This will keep track of the number of periods for our drawdown. quite the drawdown actually. So here we have over 100 bars of drawdown. I'm going to see if this actually closes positively. So it looks like we're gaining some. Alright, so after 555 bars, it looks like we reached the high watermark again. Alright. And then finally, we'll just return X. Alright, so this will be our Bollinger Band strategy. We'll go ahead and run this function. Alright, so next, I'll set ticks equal to the spread names. So I'm going to pass in all the spreads to calculate this report. So we have 90, so it shouldn't be that bad. We'll take a look now. We'll use PBL apply as list ticks function set a try bband strat x equals x. Our equity, I'll just use 2500. Silent true. If it does not produce any errors, then return the results. Alright, so I'll go ahead and run this block. So like I said, I'm passing all the spreads, and I'm going to use bband strat to calculate a nice report of the results. So I'm going to pause this video here, and then I'll continue when this is done running. Alright guys, so the process took approximately 19 minutes. And now we have reports for all the spreads. Alright, so I'm going to extract the equity curve by running do call merge apply as list 1 through the length of res. Function passing in x, temp is equal to res of x, temp equity. Going to run NA-LOCF for equity curve. Next, I'll plot equity curve, the very first observation. Type is equal to L. Y limit we'll do from 0 to 5,000. And then for II in 1 through the length of res. I'm just going to overlay the equity curves here by running lines, core data, equity curve, II, color, black. So these are all of our equity curves combined. So next I'm going to highlight which one was the best by running which max last equity curve. So it looks like the 14th column was our best equity curve. So I'll write lines, core data, equity curve, best, color, type in green. So So now you can kind of see, compared to all other equity curves, where the best one actually lays at. Next, I'll put in an AB line, set equal to 2500. Color, we'll set that equal to blue. And then you can kind of see how many actually fell below our starting capital, and then how many actually were above our starting capital. Now to extract what combination yielded the best results, we'll view res best, and this is the combination that yielded the best results. So it's a combination of BHC and MD. Then we'll double check here. So it's currently experiencing a drawdown of close to 4%. We have 93 trades total. Our drawdown duration is currently at 426 bars. So it looks like this was the high watermark, and it's remained relatively stable. And our ending capital was 3,300. Alright, so it looks like this was our best pair out of the bunch. I'll have to look through these equity curves more in detail, and then whatever I come up with, I'll share with you guys. And then in the future videos, I'll try to connect this to interactive brokers so that we can test this via paper trading. Alright guys, well, thanks for watching. I hope this helped, and I'll see you guys in the next video.